So mortgage or conventional mortgage is also what is referred to as an HP. The concept of a mortgage is impermissible because it refers to conventional lending. The alternative to that is what is referred to as diminishing musharaka, or DM in short form, essentially which refers to where the customer and the bank jointly partner to purchase a home. So for example, if you intend to purchase a home here in Nairobi, you have a $100,000 deposit and the total funding required is $400,000. So the bank will provide the $300,000 and it will become a sharik, a partner with you. But the bank is not in the business of holding a property. The bank will sell its units in proportionate ownership, let's say 80% to you over a fixed period of time. Let's say 12 years, 15 years, for example. The bank can also charge rent pro rata based on its share of ownership. So let's say, for example, the bank now owns 80% of your asset. Of the jointly owned asset, it could charge a rent of, let's say, $8,000. But as the bank's ownership decreases, then the rent can also decrease pro rata. So this is what is referred to as the diminishing musharaka concept, which is the alternative to a mortgage. So as I mentioned, that the actual Bitcoin itself is permitted. In terms of the brokerage and custodian of Bitcoin, in terms of how one accesses Bitcoin, one would have to ensure that the underlying terms and conditions of the platform that facilitates the purchase and sale of Bitcoin that is Sharia compliant. But generally you have many of these crypto exchanges like Coinbase, KuCoin, Exodus, different crypto wallets where you can purchase and sell cryptocurrency. So that is perfectly permitted because it is simply a service that they provide and you pay a brokerage fee as a service payment to facilitate the cryptocurrency or Bitcoin transaction. So I think this is a very, very important question, and if you look at other markets for Islamic finance, let's look at South Africa, for example. Out of a population of 2.5 million Muslims, it is believed that only 40% bank with Islamic finance. So what happens with the other 60%? So I think it is a matter in terms of what is termed as an information asymmetry. So there is a risk in terms of information asymmetry where you have Muslims that are not aware of the solutions that are provided in the system. So much more awareness needs to be created in terms of Sharia compliant products and what backs Sharia compliant products. To simply go out there and say a product is compliant, that is not sufficient. And this is what we have been advocating, that people need to be aware of why they are purchasing a particular product. If you're purchasing a Murabaha product, it's not simply called Islamic lending. Why is it Sharia compliant? What backs that transaction? So I think, as I mentioned, we have to go beyond simply understanding concepts now to understanding the principles that back those concepts so that the general masses are much more aware around being compliant. But that is not to say also that it's also an issue of where, you have the religious and you have the non-religious. So adoption will fluctuate also to a certain extent based on the religious nature of the Muslim population. So I think there are several factors, but as I've said, that I think the first one is in terms of education, awareness. Second is in terms of service. So unfortunately, service in many jurisdictions for Islamic finance has proven to be worse than conventional peers. So much more needs to be done in terms of servicing Muslim clients at a better level. And I would say thirdly is in terms of the competitiveness of Islamic financial products, where Islamic financial products need to be more competitive than conventional peers. So if you take an example of a typical client that has been banking with a conventional institution, what reason would they need other than Sharia compliance to move from a conventional product which they have used for 20 years, 30 years, for example, to move to an Islamic financial institution? And lastly, I would say is in terms of the standardization and regularization of Islamic finance in a jurisdiction. So in order to create more credibility in the system, you have to have laws, you have to have legal codification that backs an Islamic financial system. So for example, here in Kenya, I believe that there is a bill that was passed for Islamic finance. But has the tax law been amended for Islamic finance? Do we have case studies, legal codifications of Islamic finance that creates further credibility in the system? So unfortunately, the Islamic finance industry has focused only on banking per se, but as a substract of that, we need to look at the other elements of what I call the flywheel of Islamic finance. So you have the legal system, you have the tax system, you have the standardization, you have the audit system. All of these different elements play a role in creating further credibility and enhancing the growth of Islamic finance. So I would say at the top of the list would be obviously education and awareness, but beyond that, there are other factors that
I am a Mufti as a Sharia Juro consult that has been trained in Islamic jurisprudence and the issuance of fatwa or Islamic verdicts. I am also a qualified banker that has specialized in Islamic banking and financial services. I believe that the African continent as a whole holds great value and great potential for the adoption of Islamic fintech, Islamic financial technologies, and the Kenyan and broader East Africa and Central Africa markets hold great opportunity for Islamic finance. And therefore, we have chosen the Kenyan market specifically due to the adoption of fintech and the high adoption of mobile technology, and in particular various fintech and mobile software technology systems that have been adopted here in Kenya. So therefore, I believe that the Kenyan market is ripe for the adoption of Islamic fintech for various reasons, primarily due to the high adoption of fintech and the high penetration of mobile technology and software solutions. Allah subhanahu wa ta'ala states in the Quran, يَمْحَقُ اللَّهُ الرِّبَى وَيُرْبِي الصَّدَقَاتِ. And in another verse, وَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَى. The fundamental principle of an ideal Islamic economic system is based on a valid, legally and Sharia compliant financial transaction. Riba and interest is totally prohibited. And the very construct of an Islamic financial transaction, the mechanism, the financial mechanism, the process, the methodology is totally different from a conventional one. And I would like to provide two examples to clarify and explain this. The first is in terms of two chickens. They have two chickens, they both look alike, but why is it that one is halal and the other is haram? It is because on one, the tasmiyah, the name of Allah subhanahu wa ta'ala was taken, and on the other, the name of Allah was not taken. So therefore, one is halal and the other is haram. The second example is of a building. There are two buildings. One is solid, what we can say, earthquake proof, and the other is a weak building. It has a weak foundation. So why is it that one is strong and the other is weak? It is because in the one building it has a strong foundation, and the other building it has a weak foundation. So the difference between the two. So the end result may look the same. It is not smoke and mirrors, because the actual financial construct of an Islamic financial solution is totally different from that of a conventional loan. And I will provide you with a simple example. If you look at a sukuk, an Islamic bond is not a bond per se in terms of conventional speak, where it is lending from the issuer or from the promoter to the client. It is an asset-backed vehicle that is backed by a real financial transaction. It is not simply conventional lending with interest. So we work within a system that is based on conventional central banking, and under the confines of that, there are certain restrictions, there are certain challenges that the Islamic financial sector faces. For example, in terms of the adoption of Sharia auditing by external third parties as part of the regulation. And like that, there are various other impediments, given the fact that Islamic banking and finance in different jurisdictions may be at different stages of development. So if you look at the Kenyan example of Islamic finance and banking, it is still in its very early stages of development. So therefore, much more is required in terms of the development of the Islamic economic and financial services sector. But in saying that, the key differentiation of an ideal Islamic economic system is in terms of three things. The first is in terms of the innovative and puritanical nature of Islamic financial constructs, in terms of ensuring that the products represent the PLS sharing of profit and loss sharing, where profit is shared based on risk that is taken by both the parties. And therefore, they are products that are innovative and are more aligned to Sharia, as opposed to simply being a representation of conventional products in an Islamic wrapper. So this is the first issue. The second issue is that from an Islamic banking perspective, the underlying systems of audit, credit, risk may be the same as conventional, but the actual transaction in terms of the process is different. For example, if you look at a murabaha transaction, there are 5 different legs of a murabaha transaction. So if one misses one leg of a murabaha transaction, then the entire transaction is not Sharia compliant. And lastly is, as I've mentioned in my lecture, that Islamic finance is not only about something being Sharia compliant. We need to ensure that we adopt the maqasidu Sharia. We adopt the objectives of Sharia in terms of poverty alleviation, reducing poverty, to provide real value creation and wealth creation for the masses on the ground. So these are 3 important issues that the Kenyan market for now should focus. In other words, number 1, they should focus on innovation and growth. Number 2 is they should ensure that all of the processes and the proper methodology of Islamic finance is conducted. And thirdly is how we evaluate Islamic finance in terms of the maqasidu Sharia, in terms of poverty reduction and poverty alleviation. So this is a very, very important question in terms of how we approach the unbanked, how we approach the poor and the underprivileged. Unfortunately, Islamic finance has remained a service and a paradigm that is only offered to the middle class, the upper income families and the wealthy and the super rich. But we need to come down a few levels to the poor, to the unbanked, so that we provide them with solutions to become part of the Islamic economic system. And I think there should be 3 important strategies around that, which we have also undertaken to a certain extent. Firstly is in terms of adopting fintech or Islamic fintech, where through the mobile technology, through the touch of a button on the internet, a person sitting in a rural village will be able to access an Islamic loan. A person will be able to engage in the Islamic economic sector through that. Secondly is where there should be a push by a government, by the regulators to open up the space for Islamic microfinance, etc. And lastly is, as I mentioned before and on many occasions, that we need to adopt a lot more awareness education. So what we mean by this is that if Islamic banks and financial institutions and even government entities can push a lot of resources in terms of the CSR spend, corporate social responsibility spend, towards educating the masses, the poor, the underprivileged on Islamic finance, then this could be a very suitable mechanism of creating further adoption of Islamic finance. And also, more importantly, it is a form of sadaqah, it is a form of charity. By educating the next person, who knows, maybe that person could be the means of one's Jannah by leaving out riba and coming onto the straight path. The adoption of wealth is not bad and is actually encouraged in Sharia. The hadith states, "Tis'atu a'ashari risk fit tijara." 9/10 of a person's risk and sustenance is based on tijara and trading. So we learn from the hadith, "Innamal a'malu bin niyat," that all actions are based on intentions. So even in our trading and our financial activities, if we have the correct niyyah to benefit society, to provide jobs, to create value in society, even that will be a form of ibadah and that will be a form of worship. So we can say that tijarat, trading, outwardly may seem to be related to to the financial aspect. But in actual fact, if it is done with the correct niyyah, it becomes a form of ibadah that will take a person to Jannah. And the example of this is very simple. We know the hadith, التاجر الصدوق الأمين مع النبيين والصديقين والشهداء. That the trustworthy, truthful trader will be with the Anbiya alayhi salatu salam, with the truthful ones on the day of Qiyamah. Why is it that? Because despite the difficulty that one faces in the business society, you have chosen the path of Islam. You have chosen the path of transparency. You have chosen the path of honesty in light with the tenets of Islam. And it is a form of dawah that you are honest with everyone that you deal with, so that it can also be a form of Jannah also. Much more can be said regarding this, but in brief, if the niyyah is correct, while conducting trade and financial activities, that can also be a form of one achieving Jannah also. Firstly and foremost, our niyyah and our intention is to please Allah subhanahu wa ta'ala. And we correct our niyyah at all times that we intend to achieve the pleasure of Allah subhanahu wa ta'ala in this world and in the akhirah. So this is referred to as Sa'adatul Darain. And we believe that when we do good, when we spread knowledge, then Allah subhanahu wa ta'ala becomes happy with us and the society benefits. Secondly is, what we expect to achieve is in terms of the adoption of the opportunities in terms of Islamic fintech, the opportunities in terms of broader collaboration within the economic and financial services sector around the development and adoption of Islamic financial services products. And thirdly, we intend through these programs to drive awareness amongst the average members of the community, to drive awareness amongst professionals, finance professionals, banking professionals around the concepts of Islamic finance, banking and economics. Because we believe that in the economy and in economics we learn of what is called the supply and demand forces. So you can have all of the supply of Islamic financial products, but if you haven't created the demand for them, then who is going to buy those products? So we believe that by creating more awareness, we create more demand for Islamic financial services products, and this creates a virtuous cycle of an ideal Islamic economic system.
Very much. My name is Julius Alego. I'm the CEO at the Kenya Institute of Bankers. This was a very, very important conversation that we had today with the Mufti. And Islamic finance is a new concept, broadly speaking, in Kenya, and has a lot of opportunities in this country. And I think getting Mufti to come over to Nairobi to share conversations on Islamic Finance 101 was quite an opportunity for us. KIB being a member institution, we are happy because we were represented here by a number of bankers from different banks. And I think this then gave us an opportunity to reach out to the respective banks as to what Islamic finance is all about. And I think that's a very, very important element. And secondly as well, is also an opportunity for us to keep on creating the awareness about what indeed is finance, is Islamic finance, and demystify what Islamic finance is. And I think personally for me, I want to appreciate the discussion and the discourse that the Mufti led, because it helped demystify a lot of issues about Islamic finance that personally I didn't know. And I think also for the participants, it was an absolutely great occasion for them to appreciate what Islamic finance is all about. There's quite a lot that needs to be done. And I think first of all, as we said, indeed is to first of all appreciate what Islamic finance is all about. And if you're then to look at Islamic banking, which is part of the Islamic finance, then appreciate that you need to have that indeed a Sharia compliant product that indeed endears itself to the Ummah or to the community. And I think having seen what the discussions that we had with the Mufti today, one important element that came through was that there's a lot of awareness that we need to do. And I think starting with what you're doing now here it's absolutely important for us to keep on engaging and keep on talking to the Muslims out there, to let them, first of all, appreciate that there are different institutions, financial institutions, that indeed offer Sharia-compliant financial services. But secondly, and I think this is where now I come in as the CEO of Kenya Institute of Bankers, is to work with the banks to ensure that they are at the forefront towards developing Sharia-compliant products that will be of benefit to the Ummah and to all other customers that need such services. One of the challenges that was clearly addressed today was in terms of the level of service for the few Islamic compliant products that are there. I think there's also a lot of work that needs to be done to ensure that we improve on the service quality and service delivery of some of these products. Because if we do good service, then more and more people will see the need, and will also be able to appreciate that Islamic finance and Islamic compliant products are indeed something that is needed in the market. So I think, broadly speaking, there's quite a lot of work that needs to be done, and I think together we will be able to achieve this going forward. Thank you. No, my last word is to say thank you very much, and I think you want to appreciate you members of the press here. Please do share the word, because I think that was the greatest challenge that the Mufti left with us, that awareness, how do we create this awareness? And I think at the Institute, one of the key things we want to do as well is to have such engagements. We have agreed with him that we'll talk with him, we'll engage with him in different forums, whether this will be through webinars, whether this will be through using the print, and as well you guys in the media, to pass on the message that indeed Islamic finance is for all of us, and there are certain aspects of it that really cut across, and we must be able to embrace this fully. Thank you very much.